Good evening, friends. Welcome back to my channel, Infinite Trade. My name is Robin, and let's do a Nifty and Bank Nifty analysis for tomorrow. So before we begin the analysis, we expected that the market can, remain bullish because of the data that we saw yesterday. We saw some good put writing done from both FIs and pros, and that's what market did today. But however, the gap up that it did in the morning, uh, that created a problem, and eventually, the market was not that great. Like you actually go and buy an option and you make fantastic money. So that was not the case today. However, even in this market, our algo ran pretty well, and though it gave a target a little late, but it definitely did give a target. So let's jump into the analysis for tomorrow, and let's understand what we have in our plate. Okay, so the first thing, like we always check the participants' data. Tomorrow night, that is Wednesday, there is a US Fed meet that is going to happen, and because of that, there is a fear in the market, not able to decide the trend whether to go up or down, and that is creating a lot of confusion among retailers, FIIs, and pros. Okay, so what we have in today's data, FIs have closed 17,520 shorts. Okay, so this is something which they added the other day, and now they have closed, and they have added a little quantity of uh, the longs. Okay, so this shows fear in FIIs, and the shorts they added, they definitely exited it. Okay, and right now, like we already discussed, that they were carrying an index futures a very bearish kind of positions, but now they have neutralized it completely. If you look here, on 16th of Feb, we had the net short at around 58,000 contracts, and then it reduced to 45,000, and today finally it reduced to 25,000. So 25,000 is a decent amount. This we don't consider to be very bearish in the market. It looks like they have just shorted index futures, and they have about 42,800 hedge positions to it, which is long position. Okay, so overall expectation here, one second, what exactly is this? Yeah, so overall, what do we see here is definitely FIs do not want to take risk when the FOMC is scheduled tomorrow, so they exited their shorts. Now let's understand what they have planned for tomorrow in the options. Okay, so one thing, they exited shorts means uh, they are not confident for downside. Okay, that is one thing that we got to understand. And if you look at the call options, they have closed long, and they have closed a lot of shorts. That means even on the call side, the shorts have been exited a lot, and which in turn has caused the overall call options to become a little bullish. So that's why we see a figure here which says net long 23,307. And but the only thing here is they do not have any put shorts to support the market on the downside. Okay, this is something that can create an issue tomorrow for pros, because they have 87,800 shorts on the put side. So they'll always have a fear that FIs do not, have put shorts. So even if the market goes down, uh, they're not going to lose anything, but definitely they'll do something to enjoy that profit. And this will always be in back of the mind of the proprietary desk. And they're net long on the call options, and they're net short on the put options. But if you look at the call options, it is same, like close long on both the sides, close long and close short. That means on the call side, they really do not have any positions. So looks like FIs hardly have any positions for tomorrow. Like they just have this long positions that they have carried. And if you look at pros, they have completely carried the put shots. Okay. So this itself shows that there is a fear in the market, and tomorrow's market can be volatile because of this. Since there is not much participation from both the big players, and even the view is also a little different. Like definitely, FI's view is not bullish, but they do not want to take a chance. So that's what it shows, because they do not have any put short, they do not have any call long. They just have about 2,800 index future longs at this point. However, pros, we can see that they're holding around 87,000 put shorts. Okay, so this clearly indicates that there is a confusion in the market, and what are we supposed to do is something which we'll have to plan out for tomorrow. So what do we have in the daily chart is a weak green candle in both Nifty and Bank Nifty. Uh, it's like a spinning top kind of a candle. So we can only see all indecision candles here in Bank Nifty, and similarly, if we look at Nifty, the open gap up, but it's not a very convincing green candle, but though it is a green candle. Okay. So now let's move on to a smaller time frame, 5 minutes. Let's quickly discuss Nifty first. So look at the problem here. So Nifty went up very brilliantly. However, in the second half, it just came down to the place from where it started. Okay, so the closing is not that great, because obviously, since news is going to be driven tomorrow, and that's effect is going to be there on Thursday. Obviously, let it be call writers or put writers, no one wants to actually hold positions. So that's what we can see here. The market went up and came to that same point once again. And even if we check out Bank Nifty in that case, Bank Nifty is slightly bullish than Nifty as per the closing, because Nifty has closed somewhere at this point and Bank Nifty is still holding at this place. Okay, so now let's quickly understand what levels should we trade tomorrow. So all that we need to do is we'll put a line here in Bank Nifty, and we'll consider this as a support, 41,440. And so it has already closed below 41,440. Okay, so below this we can test today's low, which is around 41,200. So below 41,440, we are aiming a put here for the first target of 41,200, and then we can see the next target to be this level, which is 41,050. 41,050, and then maybe we can expect the gap filling, which is around 40,900. Okay, 40,900. So these are the levels for the downside if we continue to stay below 41,440. Okay, so what all things we need to keep in mind? FIIs, they do not have put short. That means no support from the big people. Okay, so we need to keep an eye on the option chain tomorrow to see if we can see any strong put writing from these big players. Second, we have support created from pros, but they will be in fear looking at no support from FIs. Okay, so any gap up, they'll definitely try to book it as much as possible, and they'll try to neutralize their position. So it is bullish right now, and they'll try to convert it into a neutral position, which may take the market sideways, definitely for sure. Okay, so what can we expect tomorrow is a range bound market with a lot of volatility. Okay, so keep this in mind. Anything about upside trade? Upside will only take, once we clear the area of 41,650. So above 41,650, we can plan an upside trade. So the targets for the upside is 41,900 is the immediate target. Okay, it is 41,972 actually, but we'll look at 41,900 immediately. Any significant gap up opening, say that we open around 41,600 to 650 or 700 area, obviously we can expect pros to book their profits here. So we'll wait and see if they open here, and if they show any price action like this, we can go for a put here, and the first target should be around 41,400. Okay, and then the day low, so it continues like that. So trade in lesser quantity tomorrow, since there is a confusion in the market and big players themselves are not confident here. Any gap down opening can create a pain for pros, because if they have shorted their positions, uh, they're definitely present somewhere here, and they are already looking at a weaker closing. So if it opens gap down, obviously they want an exit window. They'll see if, in case if we get a bounce, they are the ones who will definitely exit their positions. So here we can actually go and buy a PE, and we can expect the market to fall, and the target continues to remain the same as I said. So from here, the first target happens to be 41,200, then 41,050, then 40,900. Okay, let's quickly check out Nifty. Yeah, so Nifty is here. Like I said, we can see put short from pros, but the price action doesn't show that put short. Maybe they would have shorted here and they would have exited much quantities here, but eventually the market came down to this place. So this is definitely, they are standing at a dangerous point. So the first thing, if market opens gap up, they're definitely going to exit their positions. So tomorrow, imagine if we open around 17, 800 to 850, I think we'll see them booking their profits. So around this place, you can definitely go for a put. Whenever market opens at resistance, I blindly go for a put with a small stop loss. Okay. If it hits, then I wait and see if the trend is changing. So at a resistance, you can always go for a put, and immediately we can see it coming down to 17,730, and then eventually, if it continues to fill the gap, then we can see it coming to 17,650. Okay, so both of them have not given a strong close, so the fear is definitely there in pros. So I think they'll be praying that they should get a gap up opening tomorrow. So if that happens, obviously they'll be the first one to exit at least 50% of the quantity, and then they'll neutralize the other 50%. So keep that in mind. So any gap down opening, say at around 17,730 or something, we'll wait for it to bounce, and then you can take a trade here, and then eventually you can see that it will break this level and fill the gap, and then we can see a volatile and sideways market, something like this. Okay, so that's it from my end for Nifty and Bank Nifty for tomorrow. I've also posted the Algo video that I recorded today. The intention of recording that is we have changed to version 2.0, and this Algo looks a little different. I hope you watch this video to just see if the Algo looks better than what it was before. And you can definitely comment and let me know your feedback if I can make it a little better or something like that. Thank you for watching. Let's meet in another video. Till then, take care. Bye-bye.